This show is intended for general purposes only, as individual situations may vary. Statements made should not be relied upon as recommendations or solicitation. When discussed, past performance is no guarantee or indication of future results. Nelson Financial Planning offers securities through Nelson Ivest Brokerage Services, member FINRA, and SIPC.
Good Sunday morning. This is Bud Hettinger. Next on News Radio 102.5 WFLA, the longest-running radio show in Central Florida, Dollars and Cents, with my good friend Joel Garris from Nelson Financial Planning. You can call him at the office this week at 407-629-6477 to schedule your free consultation to discuss your retirement plans. Or you can talk to him right now at 407-916-5400.
Are you waiting? Are you waiting? Far too often, I have that conversation with folks, and they're waiting. And they're waiting. And if you think you're going to have the proverbial writing on the wall that tells you when to invest, and how to invest, and what to invest in, understand that you're just having the weeks, months, years roll by while you wait. And that just brings you closer to retirement. We'll talk more about that here on the program today. Also talk about a little bit of the difference between the question that we often hear is, do I need a trust? So we'll talk about situations where you might need a trust, or perhaps something much, much simpler would do. We'll hit all of those topics, plus take your calls at 407-916-5400, toll free 1-855-545-1025. Good Sunday morning to you all. You're listening to Dollars and Cents, a program that is Central Florida's longest running radio program. Started many, many years ago by my father-in-law, Jack Nelson. Continued today by me, yours truly, Joel Garris. It is a program that focuses on the fundamentals. We don't talk about new stuff because our experience over all those many years is that new stuff is reserved for marketing, not for investment results. That's the reality. So let's begin. So, I'll give you some statistics first. So back, 8 years ago now. See, the market had an anniversary. So, which is why I'm kind of on this topic today. Market had an anniversary on Friday. Sent out an email communication to our clients on Friday as well. Not initially to mark the anniversary. Really, it was a reminder that we've got one of our regular client meetings coming up. We do those about once a quarter. They are meetings that we hold at the Country Club of Orlando, and we bring in speakers from the industry to, talk about variety of things. Maybe it's the economy, maybe it's the tax changes, maybe it's just an outlook for the current year. Matter of fact, that's what the topic's going to be on March 20th, which is our next meeting. And so anyway, so it would start out as an email, or the genesis was, hey, we want to remind people that we've got this event coming up. But then I looked at the calendar and I realized what day it was. So Friday was March the 9th. March the 9th holds somewhat infamy because March the 9th was the day that the market bottomed out. Post-2008 real estate, interest rate, debt crisis. All right? So on March the 9th, 2009, that marked the end of a 17-month bear market in which the S&P 500 fell 57%. S&P 500 closed on March the 9th, 2009 at 677, right? So just for comparative purposes, the Dow today, 2,786. If you look at the surveys that were going on, okay, that moment, March the 9th, 2009, the weekly survey of stock investors that occurs every week indicated that 70% of all investors were bearish. Now this is after the 57% decline happened. 70% bearish. That's the highest bearish measurement ever recorded. So if you're waiting for a sign, you ain't getting it on March the 9th, 2009. You're not getting it. You're waiting for that writing on the wall. You're not getting it. But here's what happened, right? Nearly 9 years over 9 years has passed now. And from the morning of March the 10th, 2009, the S&P 500, that same index that's set at 677, has gained no less than a 19% annualized return. Total return, 381%. During the 9 years, there were 5 corrections measured as declines, okay, of at least 10%, but less than 20%. Because understand the definitions here, right? So a bear market defined generally by the industry as a decline of more than 20%. Okay, correction, it's got to be more than 10%, but less than 20%. And anything under 10% is all in a week's activity. But during that 9-year span, 5 different corrections. One in 2010, so right after 2009. So that would have tested your thought process. And then again in 2011, again tested your thought process. A few years go by, nothing's really happening. Then you get another correction in 15, another correction in 16, and then most recently, about a month ago, in February of 2018. At no time are you getting an indication that, hey, maybe you should try and invest your money. No, there's no writing on the wall. You're not getting a telegram. They don't even send telegrams anymore. You're not getting an email. That's a little old. You're not getting a text. You're not getting a snap, okay, that says you really should look at the rest of your life and your long-term objectives and what you want to do and, maybe invest some money for the future. No such thing. And the cost of waiting is huge, right? The cost of waiting is huge because you miss out on opportunities, but you also shorten your time horizon in which to actually prepare for the future. One of the things that we commented in the email we sent out on Friday is the biggest indicator that I have as to how quickly time flies is that on Tuesday, I will make another parental trip to the DMV with another one of my kids, which means that I've got another one that's turning at least 15. So we go to the DMV and get the learner's. That's my best rule of thumb of how quickly time flies. That number 2 is getting that driver's permit. Goes by quick, folks. And if you're waiting for some sign, if you're waiting, I'm going to keep thinking about it. I'm going to keep thinking about it because I don't really know whether I should just keep my money in cash or whether I should keep my money in bonds, or maybe I should buy real estate, or maybe I should buy commodities, or maybe I should buy Bitcoin, or maybe I should buy stocks, and then what type of stocks. And it's decision paralysis, folks. And the longer you stay in that without looking at history and rates of return and what things do over time, well, the crappier your retirement is going to be. No other way to say it. You're going to have less money. You're going to have less money. Decision paralysis is real. We see it on a regular basis. We see it on a regular basis with people that are still holding on to their cash, okay, and asking me, where's the best CD rate, Joel? I mean, you want to basically take a stick and poke it in my eye, ask me that question. Where's the best CD rates? Really? Really? What do you think you're going to get out of that? Well, it'll just give me some time and maybe I'll make a little bit more interest. You're getting closer to retirement every day, every paycheck. And you're waiting, trying to figure, I'm just going to, and then I'm going to see, and then I'm going to think, and then I'm going to, Good luck. Good luck. Decision paralysis is a major part of why people retire with less money. Because they can't make the decision, because every piece of information around them is inconclusive. It is. You're never going to get a sign. You're never going to get a snap that says, hey, you know what? But if you take a step back and look at the different asset classes and look at inflation and look at cash and look at CDs and look at bonds and look at stocks and look at all of this, roll liquidity into that mix as well, because that's important, then in our opinion, the conclusion is pretty clear. And our only question is, what in the heck are you waiting for? What are you waiting for? It's time in, not timing. Far too many people get hung up on, is now the right time? Is now the best time? I don't know. There's nobody on the planet that's going to know. But what I do know is if you're in for a period of time, you're going to do fine. You're going to do fine. Certainly a lot better than just sitting in cash or chasing CD rates. Anyway, we'll move off of that. But, man, I tell you, that is real, and we see it way too often. Paralysis, decision paralysis, waiting and thinking, and less money in retirement. We'll slide to the break. And particularly when as that correlates to, the anniversary we're celebrating this past Friday, right? Okay. You didn't get any writing on the wall March 9th of 2009, okay, that over the next 9 years the markets were going to go up by 381%. It didn't happen. But if you consistently were investing, well, then you had some pretty good performance. We'll get open lines, 407-916-5400, toll-free 1-855-545-1025. You can also send us an email, Joel at Nelson Financial Planning. This is Joel Garris of Nelson Financial Planning. You're listening to Dollars and Cents here on News Radio 102.5 WFLA.
This is Bud Hedinger. You know, you can talk to Joel Garris of Nelson Financial Planning right now on Dollars and Cents about anything to do with your money by calling 407-916-5400. Give them a call. It's time to make sense of your dollars.
Hey, welcome back to the program, ladies and gentlemen, here on Dollars and Cents. My name is Joel Garris of Nelson Financial Planning. Numbers to call on in and be a part of the program, 407-916-5400, toll-free 1-855-545-1025. Those are the numbers to call on in and be a part of the program. Daylight savings. Forgot to mention that at the top of the program. So if you are wondering why we're on an hour earlier, we're actually not, because it's spring forward, which means that we lost an hour, which, you know, every hour on the weekend is important, so it's always tough to lose one, but I guess we'll gain it back in the fall. So got that to look forward to. But much lighter out there in the morning for sure. So, but yes, make sure you set your clocks ahead. It is, in fact, spring forward. So talked a lot in that last segment about the notion of time versus timing. Certainly what makes us really think about that is the fact that it is, 9 years since March 9th, 2009. A day that certainly, if you look at investor sentiment, it was the most negative on record in terms of investor sentiment and the surveys that were done at that point in time. You're never going to get a signal. You're never going to get, okay? The more you sit around and wait, the closer you get to retirement. A huge cost to waiting and waiting and waiting. So one of the other questions that we get an awful lot is you wind up getting a big question about trust versus transfer on death versus which one do I need. The reality is that when you look at the options, I think the first thing that you have to ask yourself is, what am I trying to accomplish, or what am I trying to prevent, more importantly, when I pass? And that's really kind of the first question to start to ask as to whether you might need a trust or not. Because what a trust really does is it lays out kind of what happens to the money after you're gone. And it basically winds up being a document that sort of governs how things are done along the way. Because what the trust does is it spells out the distributions and the money distribution over time to your beneficiaries. So let's use an example, okay? So let's say that you're concerned about the spending habits of a child, or you're concerned about the spending habits of their spouse, or perhaps a child may have some issues with addiction, or just simply they overspend. And what a trust would do is it allows for a plan whereby the money gets distributed out over time. And so by distributing the money out over time and having then they can't sort of rate it for larger items or spend it at a high, quick pace. So the point of that trust is really, if you're in a situation where you've got those concerns and you really want to spell out a plan that ultimately seeks to protect that money and make sure that it doesn't just all fritter away. So that's what the trust does. The trust, in fact, does do that and helps lay out that game plan. Is it also a way to avoid probate? Sure, absolutely. But there are simpler ways to do that by naming beneficiaries. So whether you have an IRA or whether it's a life insurance policy or whether it's a bank account, in an IRA and a life insurance policy, those types of investments have the ability to name beneficiaries directly on them. In contrast, the other accounts, which would be after-tax accounts, so like your checking account and an investment account, those would be able to be addressed using a something called a transfer on death or a payable on death type of registration. So what that does is the second anything happens to you, a death certificate and a paperwork immediately conveys that over to the beneficiaries. So obviously it avoids probate, and it's a relatively simple process. But that also means that the beneficiary now has that money outright, and ultimately then that's theirs, and they can do with it as they wish. So as you think about that, then you may come back to the conclusion of, well, maybe I want to put some restrictions or some parameters on that money. And that's where a trust comes into play, because that allows you to be able to put those restrictions in place. Okay, a trust can also be used to avoid probate. A trust cannot be used to avoid liability, and I think that's a common misconception. A trust, particularly obviously a revocable trust, is one that is really just an extension of yourself. So it doesn't really avoid liability. The only way to have it avoid liability is if it's an irrevocable trust. And a revocable trust becomes irrevocable when you die, therein leaving the parameters that you've set up on the money to be a permanent parameter that nobody can change. But a trust in its revocable form while you're still living doesn't add anything in terms of protection of liability. When it becomes irrevocable, obviously that's when it is fully protected. So just be aware of those distinctions and differences, and why and when a trust is more important than not. So bottom line is really think about the distribution and how that might play out, and whether in fact you want to sort of put some parameters on that. There used to be a very strong estate reason for doing trusts and to preserve your credit shelter exemption and things like that. And there still are. Those are very much real issues, except that they're real issues to a very small sliver of the population. Because the estate tax exemption has increased as much as it has, the reality is that the reality is that you don't really find the need for that type of more sophisticated type of estate planning like you used to back when the estate tax exemption was, say, $600,000, which that was where it was at not too long ago. Today, it's gone up to $11 million or over $11 million per person. So not as much need to have to do that from an estate planning perspective, but it fundamentally comes back to how do you want to restrict out that money over time. And if you do, then that's where a trust comes into play. It starts out as a revocable one while you're still living, and then when you die, it becomes irrevocable. Yes, of course, you could have an irrevocable trust right out of the gate, but that's pretty restrictive, and it also means that you don't get to change it, because irrevocable means just that. You can't change it. So the traditional approach of the revocable, that they then becomes irrevocable when you die. Think about what happens to the money after you die, or what you would like to have happen to the money after you die, and that trust really does provide the blueprint for how that money is distributed out over time. We'll slide to the break. We're already at the bottom of the hour, so we'll go to a break. We've got open lines, 407-916-5400, toll free 1-855-545-1025. Those are the numbers to call on in and be a part of the program here on Dollars and Cents. This is Joel Garris of Nelson Financial Planning. You're listening to News Radio 102.5 WFLA.
This is Bud Hedinger. You know, you can talk to Joel Garris of Nelson Financial Planning right now on Dollars and Cents about anything to do with your money by calling 407-916-5400. Give him a call. It's time to make sense of your dollars.
Welcome back to the program, ladies and gentlemen. Dollars and Cents here on News Radio 102.5 WFLA. This is Joel Garris of Nelson Financial Planning. Thinking a little bit more about what we were talking about earlier in the program. As we said in the email we sent out to our clients on Friday, March 9th, marked an anniversary. The bottom of the market in the 2008-2009 implosion. And during that period of time, since 2009, there's been no writing on the wall to tell you what to do, right? I mean, I think the common objections are still the common objections and always will be the common objections. Things like, I don't think the markets are going anywhere. You can't make money when markets are volatile. Now is not a good time to invest. That's always one of my. That's just not a good time. Okay. How about tomorrow? How about next year? Well, that means you're close to retirement. Worried about world events? Well, last I checked, that still goes on. There's never been a shortage of that. I want to wait for a better time. I want to wait for a better time to invest. Really? Okay. How are you going to know that? It's better to be safe than sorry, especially when you're retired. Yeah, except for inflation and taxes and the fact that everybody's living longer in retirement. The objections don't change. They're the same. Year after year, decade after decade. Objections are still always the same. Meanwhile, your retirement gets closer. Busy week last week for the markets, too. Speaking of that, I guess the markets marked the March 9th anniversary with a pretty good day. That was up over 400 points on Friday. As we saw this tariff stuff continue to kind of chew out or dare I say get a little bit more diluted, which if you listen to the program last Sunday, that was sort of our speculation. Markets had a pretty adverse reaction to the initial announcement of these tariffs on steel and aluminum, but we commented last week on the program that the pattern that we see from the current administration is to toss out the most extreme position, if you will, and negotiate from there. I guess that's part of the art of the deal. Never read the book, but I assume that there is, I guess, some logic in that. Is if you take the most extreme position, it means that whatever you agree to after that makes you look like a more reasonable person. So obviously, a tariffs that have exceptions and flexibility and those kinds of things aren't nearly as dramatic as sort of what the markets were thinking last week. So when the announcement came out on Thursday, obviously the markets responded a bit more positively. And as we said on the show last week, I mean, here the reality is that you look at the companies in the S&P 500, and I think here in this country we have a very narrow focus that the world is just the United States of America. And I mean, great country. The reality is, though, that there's a whole lot of people in a whole lot of other countries around the globe. And if you look at those 500 largest companies in America, which make up the S&P 500, what you'll find is that they make about half of their profit, and in fact, half of their revenue as well, outside this country. So when you start talking tariffs and trade wars and all that, that can create some concern that might affect the ability of these companies to do business around the world. And the reality is that, of course, the genie's out of the bottle on that, right? I mean, if I'm a big company, I'm a large company, I've got plants all over the world, I'm doing business all over the world, very hard to take that genie and sort of stick it back in the bottle, right? I mean, you're making profit, you're making money, and certainly any administration doesn't want to implode the economy because you don't get elected when that happens. It's that simple. And I believe all politicians love to get reelected. That's the reality, right? So when you look at that global economy, it's really dramatic in terms of how synchronized the growth is right now in the world. We'll give you the following statistics. So if you look at the number of individual countries, specifically the ones that have measurable economies, so there's 148 of them. Okay, so 148 country economies. Of the 148, 144, so 144 out of the 148 are on an expansion path for 2018. What's that mean? It means that the world, for the first time in a very long time, like well over a decade, is experiencing a synchronization of global economic expansion. You've got 144 out of the 148 countries that are expected to have economic growth in 2018. Folks, that's a big number. And that's a number that's really hard to ignore as this market and the global economy continues sort of that upward movement that's been going on since March 9th of 2009. No writing on the wall that tells you that, but that's what's happening out there in the world at large. And then, of course, this past week, you had the whole, agreeing to meet the North Korean guy. I mean, it's kind of a busy week for headlines. And then, of course, the whole Stormy Daniels. I mean, man, it's like a year's worth of headlines this past week, right? We'll see what next week brings, I guess. Anyway, we will slide to a break. We got back from the break. We'll take your calls, 407-916-5400, and we'll kind of do a wrap up for this week. And also talk about next week's show. We got a special show coming up next week. So we want to talk a little bit about that as well here on Dollars and Cents. This is Joel Garris of Nelson Financial Planning. You're listening to News Radio 102.5 WFLA.
This is Bud Hettinger. You know, you can talk to Joel Garris of Nelson Financial Planning right now on Dollars and Cents about anything to do with your money by calling 407-916-5400. Give him a call. It's time to make sense of your dollars.
Hey, welcome back to the program, ladies and gentlemen. Dollars and Cents here on News Radio 102.5 WFLA. We do have open lines, 407-916-5400. 5400. I think we did have a call, but then it wound up getting so if that caller wants to call on back in, that's perfect. 407-916-5400. And of course, as we were saying before the break, a little teasing of next week's program. But next week's program should be a good program because, well, it won't just be me, so that will make it good, right? No, little humor. Next week, as you know, okay, it's tax time, right? And when you go into the office at Nelson Financial Planning, it's of course not just me. I have a team of people. One of those folks happens to be an IRS enrolled agent. And her name is Christina Lamb, and she's been with us for probably 12 or 13 years. So, matter of fact, she actually started out with us as an intern from UCF. And here's something kind of as funny how history repeats itself. Our newest hire, a gentleman by the name of Garrett Fields, is also did an internship with us from UCF. Anyway, Christina is going to be joining us next week on a very special program that will be focused on taxes, okay, because it is crunch time for your taxes. Next week, it'll be about a month out from that April filing deadline, so we'll have a lot to talk about next week on the program that will be tax related. But we will, in fact, go to the phones, and hopefully I don't mess this one up like I did before. Peggy.
Oh, good morning.
Hey,
how are you?
I am great. How are you?
I'm doing better.
Well,
now that I get you on the phone.
Well, very good. I'm glad we got connected.
Yeah, I have a simple question.
Okay.
Because everything you're talking about in regards to having everything on in case of death, I also have a generic type of power of attorney. I know it ceases on death,
correct,
but in case I become incapacitated, it gives the right in depth to do my transactions, and I have everything with my son on all my monies.
Okay, good.
And I retired kind of twice, and I was with the bank for many years, and I get a small little pension, and Social Security has been very good to me. So I'm living the life that I have lived before, and
okay.
When I do a little side job that I have to report to the IRS, which is okay.
Yeah, that probably is good for good for the mind to stay active.
Absolutely, and I stay very active.
Awesome.
I have a house that I owe, unfortunately. I moved and made a wrong decision, but I had to move because of where I lived previously. But I bought too big of a home, so I have a mortgage,
okay,
which is no problem. And I don't think nowadays you can live in a house for $500 plus your insurance and your taxes.
True.
So I may just stay here, but I'm not sure yet.
Okay.
I haven't found the perfect place, but I've made a quick claim deed, and I don't know if quick claim deeds. I should take it to a lawyer. I've already got it notarized, ready to file with the court. In case something should happen to me, at least he wouldn't have to battle for at least the benefits that I have and the equity in my home. But I do owe a mortgage, so he has to understand he would have to probably refinance and put it in his name. But a quick claim deed is going to actually give him the right of ownership.
What? And so basically that's a quick claim deed that basically right now you own the home yourself, and the quick claim deed says, I hereby give it over to my son. Is that what the deed does?
That is correct, yes.
Okay, so that is a solution. I'm a little concerned about, workability. If you drop dead next hour, if you will, it's going to be hard to file that on a Sunday. So one suggestion that I would do is, and you got to be careful with this, Peggy, because this is your personal residence, your primary home. There's
Correct.
some protection of liability that the state affords you that you don't want to kind of mess that up by getting the registration different than how it is right now. Because right now, as your primary residence, where you're the owner, you're a person rather than a trust or some type of other structure, then you're able to get that liability protection that the state affords you. So what I might do on that situation, Peggy, is there is something called a ladybird deed that basically is a transfer on death on your home. So it basically adds a transfer on death on it.
Okay.
That might be a little bit better alternative for you. That's not a perfect solution because there's some case law in the state that questions whether that liability protection still continues. But in your case, that would certainly solve your problem of, if I go, I want the house to be able to pass directly to my son without having to go through probate. Peggy, the house is the tricky part, particularly here in Florida, and particularly with the current state of the case law that kind of tosses the ladybird deed a little bit up in the air. But the ladybird deed is still effective for accomplishing what it is that you want, which is, hey, I want to make sure that I can avoid probate and have this go directly to my son without having to go through that process. And what that does, Peggy, is that just puts a transfer on death registration on the house.
Okay, and that's basically what I have on everything else.
That's exactly right, and that's simpler. If your son, older, responsible adult, you don't certainly need a trust to restrict the money. It's just going to be left outright. Yours is sort of the classic situation where that TOD works very well by effectively naming beneficiaries on everything you own.
That's awesome. Yeah, and then you suggest that I see an attorney. I know that's kind of a direct question, but I probably do need to see
obviously for legal stuff, if someone's writing up a legal document, then obviously you want to see an attorney that is licensed here in the state of Florida.
Okay, awesome. And
Awesome.
I know quite a few of them.
Well, there are quite a few of them out there, so I'm sure you can find one. Peggy, thanks very much for that call. We appreciate it. Good question indeed. We are going to wrap it up here on the program. Make sure you listen to us next week. We'll have Christina Lamb of our office in. We'll be talking a lot of taxes. So hopefully it will be a very topical show given the date and the time, because next Sunday it will be not quite exactly, but pretty close to being 1 month out from the April 17 tax filing deadline. So we'll have Christina and myself on the show next week to talk about a variety of tax stuff. Should be fun. Looking forward to it. Usually it's lonely here on a Sunday morning when it's just me. So anyway, thank you all for listening to the program. We'll be back next week, and we'll have Christina on the show to talk about a whole bunch of tax stuff. You've been listening to Dollars and Cents with Joel Garris here on News Radio 102.5 WFLA.
This is Bud Hettinger, and you've been listening to Dollars and Cents with Joel Garris of Nelson Financial Planning. If you missed any part of today's show or want to listen to it again, check out the radio show at www.nelsonfinancialplanning.com. or connect with them on Facebook or Twitter. Be sure to call Joel this week at 407-629-6477 to schedule your free consultation to discuss your retirement plan.
Fees, commissions, expenses, investment costs come in all shapes and sizes. Do you know how much your investments are really costing you? At Nelson Financial Planning, we believe that costs should be a major consideration in your financial plan. After all, the lower your costs are, the more you get to keep for yourself. This is Joel Garris, and I invite you to get educated about your investment costs. Visit NelsonFinancialPlanning.com or call us today at 407-629-6477 to set up a personal conversation to review your investment costs. That's NelsonFinancialPlanning.com or 407-629-6477 to set up that conversation.
A-plus Better Business Bureau accredited. Nelson Financial Planning offers securities through Nelson Ivest Brokerage Services. Member SIPC and FINRA. Listen to Joel Garris on Dollars and Cents every Sunday at 9 a.m. on News Radio 102.5 WFLA. This show is intended for general purposes only, as individual situations may vary. Statements made should not be relied upon as recommendations or solicitation. When discussed, past performance is no guarantee or indication of future results. Nelson Financial Planning offers securities through Nelson Ivest Brokerage Services, member FINRA, and SIPC.